So we got about 1 minute and 54 seconds.
Okay, guys. Where's the chat at here? I don't see anybody on chat yet. All right, we got 31 watching. Woohoo! Hey, type something in chat so I can see if there's any chat action.
There's lots of chat action.
I don't see it. I have show chat.
What's up, guys?
Okay, I got it. Hey, guys.
What's up, guys?
All right. I'll try to watch the chat stuff too, but we'll be spinning our heads around here for a bit.
So,
okay, we go live with the Fed in 4 minutes. So, hey, let's talk crypto for a couple minutes before we wait for the Fed, Phil. So, Kevin O'Leary is trying to blame Binance for FTX failing. You know,
I saw that.
Yeah. Oh, I'm sorry. Can you get? How's my camera? Is it centered now?
Yeah, you're good there.
Sorry, I had it off to the side. Yeah. So they had, forget the fraud, forget that he wasn't reserved, forget that he commingled, forget that people sent their money right into Alameda. It's Binance's fault.
Right.
Create an environment where you could be susceptible for somebody to take you out.
Right.
You know, it's ridiculous.
Yeah, Bitcoin's pushing up here into the announcement and getting into quite a bit of resistance. We're pushing up over the quarterly envelope low, and so that's where the low of last quarter was. And if we go to a higher time frame, we can see that. You can see all these wicks we're running into here.
Yeah, everybody's pushing up to 40.90 here. I just don't know if they're going to try to go to 41.80 or if this thing's just going to dump.
So SPX did not get to its 50 weekly, whereas ES did. So this is what we're going to be watching here. If you guys notice, we've been compressing between the 200 weekly moving average on the daily, and I think that's the daily. I'm sorry, 200 weekly. Sorry, 200 weekly on the S&P 500, and the 50 weekly on the S&P 500. So we're compressing between those two areas. So ES got to its 200 weekly yesterday, but the index didn't. See, we got to that yesterday. So we rejected hard off of it. We're pressing up over the 200 daily here, and we were just kind of fighting around it today. If you look at that, you can see we were kind of went up to it and hanging out, and so we're just kind of holding here ahead of the announcement. And then in about 3 minutes, we're going to get news. So what I'm going to do is I'm going to bark off the headlines. So we're going to assume we're going to get 50%, and or 50 basis points. If we don't get 50 basis points, we get something else. Then we're going to get huge amounts of movement, and we'll see where that goes. On the chart here, we've got, on ES anyway, we've got the essentially a big down channel that we're pressing up into as well. So we're just above the 200 daily. If we get any kind of knee-jerk reaction up, the S&P 500, the actual index, I suspect that we'll tag this 200 or 50 weekly. Otherwise, first major downside reference point I have that I look at is the 9 daily EMA, which is this blue line down here. Closing value on that is 40.33. Intra-bar value is up at 40.70 or 40.36. Closing value is 40.18. Closing value is what I'm looking at. So we shall see here. Couple more minutes. One more minute, and we'll start getting the headlines. So we can zoom in a little bit more on. Let's see, let's look at ES on this. Okay, that's a weekly chart. Let's look at Let's look at a 15-minute chart on this. So we flipped the range trader on the 15-minute. Obviously, we're on an uptrend now on the 15-minute. Let's see what our higher time frames look like. We flipped the 4-hour. Let's see, in the 8-hour. 8 hours in an uptrend. 12
yes,
hours.
in Robinhood, the only way that you could play this is that if you take a directional a week out, and then out of the money, and then you sell an out of the money put either underneath that price or do a calendar, so that you can suck out the probabilities. Wow, we just hit something. We dumped, Phil. I bought puts here.
All right, here comes the Fed repeats ongoing rate hikes increases are likely appropriate. So they're sticking with the hawkishness initially. 50 basis points is the decision. So expected rate hike. So now what we have to look at is the language.
Yeah, my futures hit full profit, Phil.
U.S. Fed interest rate decision 4.5% versus 4% previous estimated 4.5%. So that's just getting them to the 4.5% Fed fund rate, right? In determining the rate hike pace, the Fed will consider cumulative tightening, policy lags, and economic financial developments. All right, so we got our expected 50 basis points. The market, as usual, the market pushing up into an announcement usually isn't bullish. The Fed says inflation is still high and that it is paying close attention to inflation risks. On the downside here, guys, I'm looking at this poor low area at 39.45 approximately in here. There, you see how these lows, like these equal lows, that's probably going to get cleaned up if this thing rolls over, okay?
Yeah, I just bought strike 400 puts for a week out. That you heard that ding probably on. So I got that at 425, and I think that's a good trade. You could probably this push up higher was really, they took us to the wall. That candle yesterday was the middle finger of death candle, and that was an exhaustion wick.
Yeah, so pretty big dump here, and we're down to 40.40 now. You can see the reaction off that 200 daily moving average. So now we're going to see, it's going to get down toward the, now we're dumping pretty good here. This is going to get down to the daily 9 EMA 40.20, okay? So now we're going to see what the reaction is here on that.
Yeah, and one thing too, since we're talking to people that usually aren't in our room, is that when I walk puts up and down. So right now we broke the 400. I have 400 strike puts, and I'm rolling those down now to strike 399. And that's kind of how I take money off the table, but keep full exposure, even if it like jumps above me again here in a minute. But and I'm looking at the portfolio here a little bit too here. So SPY's doing good, but
big negative ticks.
Go ahead, Phil.
Big negative ticks.
Yeah, and when we do this commentary together, Phil's looking at Powell's in any kind of language and stuff like that. So
yeah, I got quite a. Let's hit some of the headlines here real quick just to get them caught up.
Yeah.
Inflation. Fed says inflation is still high and that it is paying close attention to inflation risks. Only two policymakers predict a Fed funds rate of less than 5% by the end of 2023. So that is key because most people think that they're going to hit 5% and quit. They're being pretty hawkish here. Let's see what else. Repeated interest rate increases by the Fed will be necessary to achieve a sufficiently restrictive policy stance. So they said a couple announcements ago I think the last announcement they said they're just getting into restrictive territory. Now they're saying that basically what they're saying is they don't feel like they're in sufficient enough restrictive policy territory yet. So this is all very hawkish. And this is what we thought would happen. We get a 50 basis points hike and then hawkish rhetoric after that. And the more they raise the interest rates, that's going to incentivize these banks to park more money with the Fed overnight, which leaves less liquidity for the markets. And we'll take a look at the liquidity graph later. So we have an initial wick down to 40.32, and this is the part we call the mental illness. If we look at a 5-minute chart, big ranges, obviously.
And just so you guys know too, we're OPEX week on top of this, and so we have Monday and Tuesdays are this week we're up. I'm expecting Wednesday, Thursday down. And then sometime before Friday, we usually will revisit the open on Monday. So that's down at 39, I think 60 area. So we can have some very high volatility next 2 to 3 days here that we could dump. And so just FYI for that.
So this is my downside target, if I can spell correctly. Just right at 39.45. I think they're going to dunk that. There's a bunch of liquidity hiding here, guys, that most likely once this starts to break down. First thing we got to do, though, is get through this daily 9 EMA at 40.20 before we start getting accepted basically back into this range here. And we may not get too much more of a move until he starts talking at the presser.
Yeah, I think we just pushed down a little bit more, Phil, did we not? Let's see here.
We got a little bit of a dead cat bounce. So looking at this, looks like a dead cat bounce, and we'll watch to see if they can take out the low here. But we are getting kind of overdone on the 1 minute initially. So this is why we're seeing a little bit of a bounce. Our cycles are all pegged lower. So typically when this thing cycles down, you'll expect price to move back up. Now, this is a 1 minute chart. Usually this is only valid on extreme volatility, which is what we're getting right now. Going back to the headlines here, the Fed says job growth has been robust and unemployment rate is low. Fed claims that the vote in favor of the policy was unanimous, so everybody voted for a 50 basis point hike. Let's see here. Recent indicators point to a modest increase in spending and output. So this is key. Fed's median view of the Fed funds rate at the end of 2023 is 5.1%, up from 4.6%. I think, Bob, if they're going to be that aggressive on the Fed fund rate, because that starts to affect our ability to repay our debt, that they're going to try to hyper-dollarize the world and expect the dollar to get really strong.
Yeah, and look, our view, at least my view, is I think inflation is a secondary concern for the Fed. It's really the strength of the dollar. They're massively worried about China, Russia, and the BRICS trying to create a competing currency system, and at least until we reshore a lot of our manufacturing again. So I think he's going to be higher for longer. And look, we had a 7.1% print. He said 2%. He's going to keep printing Fed fund rates higher until he crosses over that CPI line. So then he may aggressively pivot down, but he made a commitment, and I think he's staying with it. And right. I think people have been trying to outrun him, and plus the Treasury, I think, is running out of money, right? Phil, they've been running at cross purposes to each other. Fed's been reducing its balance sheet. The Treasury has been draining its reserves to keep the party going. When the Treasury runs out of money, the Fed's the only game in town. And then the banks have been increasing, I think, their reverse repos. They did it again today, right, Phil?
Yep.
And so,
reduction in the reverse repo, or I'm sorry, more money parked at the reverse repo. Yeah,
and just so you guys know, when the market pauses these rate increases, it's bearish for banks. It's bearish for energy, and it's bearish for tech, and I think bearish for materials. So that's been holding up the markets. So I think we're going to run into some, you know, uh, probably February, March, I would think, put a pause, Phil. And that's why I said, I think our view is, you correct me if I'm wrong, Phil, is that probably won't see a market bottom till fourth quarter of next year.
Yeah, I think we have to wrap our heads around that, or at least the second half of the year.
Yeah, it's going to be a slow motion, plane crash here. So I want people to kind of get their arms around, especially if they can't get energy prices down.
Hmm.
That's going to be a big problem.
One thing I wanted to show you guys, and this is typical, right? This is our envelope plots, quarterly envelope low. That means last quarter's low of Bitcoin. Notice how they get into there, right? They just tap right into that range. That's no coincidence. They do that right into the announcement, and then boom, the sell. So we're assuming this is going to continue to probably roll back over, but you can see how they do that. They come up into liquidity like that to get people that were, stops are hanging out up here under that quarterly low. They tap it just right into the announcement, and then boom, sell. So this is probably more professional money up in here, position short.
Yeah, and I think yesterday was a tell when they pushed it all the way up to 41,180 or some 41,180 area, and then
Eiffel Tower.
Eiffel Towered it, and they got stuck underneath it. Hey, for those that are interested, what I'm doing is I'm rolling down from 400 to 399, taking a 54-cent credit on the trade. In fact, yeah, and that's what I'm doing right now. And then as we break these numbers, I'm going to keep rolling down. So, and this is what I do you typically 10 contracts when I do puts and calls. And people always ask me, "Oh, Bob, what's your target? What's your stop?" I like to roll down, or I like to take size off. Options are too hard to do targets and stops and limits because of spreads. It's like playing 4D chess. You have volatility against you, you have time against you, you have interest rate against you, you have the price working against you. So you have four variables in an option contract, and the best thing for you to do is going your way. You just keep rolling down or scaling out or selling against it, and in that way, your goal is to get your cost out of the trade as soon as possible. So I just want to share that with you guys.
Bruce is getting religious, Bob.
I saw that. Well, he wasn't bullish though, was he?
I think Bruce is net bearish.
Yeah,
Bruce is the trading room mascot for those of you that don't know, and master troll.
he is, and he's also a master analyst too. So
Always take Bruce's first read and do like a 10x on it.
yeah, first read, take what he says, and then as he equivocates, ignore it.
and then on the second guessing of that, double down.
Paul is hawkish. Phil C.
Yeah, Phil C. Powell is hawkish. Basically, they're looking for Fed funds rate to go up into the 5% territory into the end of next year, which is really, really hawkish because that means that it's all about, well, are they going to pivot or are they going to pause? You could say that lowering the rate of increases is a pivot. Like you could say this 50 basis point might be a pivot, but it's not. I think that statement by them to say they're going to be at 5.1% by the end of 2023 means they're not really looking to let up, and that's pretty hawkish. So as you guys can see, that daily 9 EMA is an important reference point, and we got a decent bounce off of that. And so I'm looking at this 40-50 area to be resistance now. If the bulls, if they're really trying to keep this up, they're going to have to get back over 40-50.
Yeah. Hey Phil, that short trade worked out.
Yeah. And then our larger shorts should start getting paid here as we progress.
So just like yesterday when they blasted through the stops on the way up, that kind of burned me a little bit. they blasted up my limit on the way down and filled me another $100 of profit on the push down.
It's a lot of slippage lately. That just tells you there's not a lot of liquidity in the books.
Yeah. So guys, yesterday I had stops in. I was trying to see if I can catch a down move on the CPI print, and I had a fairly tight stop on my futures contract. And by the time I was filled, it was almost a $400 loss. So you have to be careful on those things. Now, what worked out for me was I shorted it again, and that Eiffel Tower, kind of brought me back a little bit. I think I recovered like 60% of it. And so today I was short, and this time it worked in my favor. It blew right through the limit and then filled me. It's really weird. So you got to be really careful during these environments, especially with liquidity falling so much. So this crazy market.
So yeah, we're pushing down. We didn't quite get to the daily 9 at 40.20, but it front ran it, and so the 5 minutes kind of coiling up here, probably going to push lower. We are starting to get a little oversold on the cycles, which is why we probably saw that 5 minute candle go up here. But looks like, trend's definitely down. If you look at the 1 minute, 1 minute, I don't usually trade on the 1 minute. However, if it's like coming off an announcement, I will watch the 1 minute here. So
yeah, what Phil's referring to the coiling here is you notice that on at least the 5 minute, each bar is getting progressively smaller in range. And if it doesn't break up over that second, like 401.26 in SPY, then you can expect a continuation pattern down for almost the same length of the first initial bar down.
Right.
Okay. So if this thing gets bearish, you can go from 405 to 399. Look for 6 points down, 400 to 394. Okay. So this market has a lot of math to it, and so. And if it breaks over that, then you got to look at, okay, can it take it all the way back up to the moving VWAP at around 404? So you just have to be open to everything. But right now it looks weakish. We keep seeing the trend stair step down.
Thanks, Edmund. Appreciate that. This is an inverted head and shoulders. Now this is a 1 minute chart, so we're talking microstructure stuff here. If you saw this structure on a higher time frame, usually that's trying to put in a bottom here. Now we're in the middle of a rate hike announcement, so a little more volatility. But typically you'd look for the break of the neckline and then get a move back up, potentially up to the Ranger cell zone, which are derived. These are just this thing's constantly measuring the range of movement and then plotting the likely resistance point of that range. So it takes a lot of the math out of the equation for us, so we can concentrate on managing positions and entries and things like that.
Yeah, fire questions at us here, so we can keep from having while we're waiting for the Powell to speak here. So he probably not going to talk for another 15 minutes, like or 10 or 15 minutes.
So he's going to get on the mic in 15 minutes. I'll bark off some more headlines. Right now we're just looking at the initial reaction, which now has flipped the 40-50 area to resistance. And that's going to lighten up, target the daily 9. If this daily 9 area down to 40.20 doesn't hold, we'll break through that and we'll probably test 4,000. And ultimately, I think we do, and ultimately go back down to 39.50s and test that area where we had that poor double low I was showing you guys earlier. So to recap, Fed 50 basis point hike. The tone on the release was hawkish through 2023, and the market's not liking it. Now, the liquidity in the market hasn't been going up. So it's not really surprising to us that we're not just rocketing off to the races here. They're just not putting the liquidity in the system that's required to do that.
Yeah, Bruce, crypto it moves with liquidity. So if the liquidity is moving higher and there's a virtuous environment, Bitcoin, all that will get a bid. If not, it's going to go down. The altcoins are dependent on how tied they are into all these exchanges blowing up. So there'll be a bifurcation between crypto and Bitcoin, in my view.
Yeah, so here's the area that we're consolidating, and further breakdown should take us down to 4,000 if we do get this if this coiling breaks down.
No, I'm not saying that, JJR. What I'm saying is, and this is me, not necessarily Phil. This is kind of my observations on OPEX is that if the first day is up, the second day you get follow through, and then you get the reversal because they're trying to clear out all the puts and calls, and they usually try to tag the weekly open during OPEX week. So if you get a big push up Monday, Tuesday, Wednesday, Thursday pushes down, okay, and if it doesn't get to that open weekly open, then Friday usually finishes it. If it pushes down through that weekly open, Fridays a lot of times it'll come back and give you a neutral week. So that's what I look at. But if you look at it from a probability standpoint, if Monday's up, Tuesday's up, Wednesday's down, Thursday's down, and Fridays is kind of cleanup day. Usually neutral to sometimes positive. So that's how I look at it. But this is also Fed week too. So, you get a lot of reversals off reversals with the Fed. So if it's down today, a lot of times they'll reverse it on Thursday, but we're dealing with OPEX too. So it's just going to be a mess.
Bit of a bear or bull flagging here on the dollar off the initial reaction up. And it looks to me like it's going to go do another leg higher. So for you guys to, for some perspective on the dollar here, right? Because the markets are inversely correlated to the dollar. We've come into this weekly buy zone on our range trader, and this area shaded here is basically where you would expect to get a bounce because you had basically an area of battling in there. You had some counter trading going on the weekly. So you have this broad range of where you would expect to see a reaction out of this zone. Getting this signal on the weekly, given that we've had such a strong impulse move up, we should see some follow through from this. And this going back up would coincide with the markets topping out here in this bear market rally. So looking for a inverse correlation here, this up, market's down.
Yeah, the other thing too is when Phil throws up his liquidity chart, is that when you get a situation where the fair value pushes into the short hedging zone, like it has, it will come down and test the liquidity line, and the liquidity line is sitting down at 38.56. The week begin was at 39.56. And so, we have pressure on the markets to come down and test that fair value area. Okay. Yeah. And the heat indicator, I overlay a heat indicator over top of Phil's liquidity chart, and that liquidity is the heat indicator is also saying it's overvalued. So we're overbought, and so. You probably, what stands to reason is even if we're starting a new bull market, which I don't think we are, is that we're going to come down and test that fair value, and the Fed is still taking liquidity out of the market. So, and that's basically the cocaine for the market. If they don't have liquidity in the market, the banks don't have money, and there's no credit facilities, and it just takes the edge off. You're relying on retail, and retail can't push the markets. Only institutions can.
This is the liquidity chart. I have the breadth under it, and so you can see the breadth has been pretty weak relative to the move up. There really hasn't been broad participation in this, and breadth just means amount of advancing equities versus declining equities. And so we're expecting this to roll over and get into the oversold capitulation area, which typically is where we see a bounce come up out of those areas. So that would be like the next thing. If we do roll over here and we take out these lows and we start pushing back down into this, getting a bear market rollover, we'll be keeping an eye on these levels here, because that plays a part into, where we would say, okay, cover some of the short hedging and, look for a counter trend bounce short term, obviously, until we get out of that, because it just gets a little overdone on breadth, and you're always going to have like this mean reversion move back. So it's helpful to keep an eye on that. But like we showed you guys into this morning's video, that candle there, whenever you see that candle on a daily chart, that's usually going to see some follow through to the downside. And so that's why the most likely target's going to be this double low here, down here at that 39.45 area.
Yep, the middle finger of death.
This one is this version of it, same chart, but this one measures fair value. And so the only thing we're looking for now is this risk off to trigger, and we may get it today because this liquidity is actually going to drop some more today, based on what happened overnight with the reverse repo. And I think that might be enough to trigger the risk off, because we're trying to measure if the flow is going up or if the flow is going down. From here to here, obviously the flow is going up. But you can see how it's starting to roll over, and really liquidity has, we're at the same levels we were at Friday, middle of November, basically, right? So we are, if liquidity is at the same level as it was the middle of November, but yet we're higher here, we're over fair value, right? So right now we're 200 points over fair value. But when we tag on fair value, the extreme level that we call short or hedge, and we get a risk off, that's the combo we watch for to tell us that high probability we're going to roll over.
Yeah, and if you look at the chart, we're putting in a classic bear flag right now. So worst case scenario, 394, we'll tag today. Okay, so
looks like they're going to hold it here, Bob, for the presser, which starts in about 4 minutes. This is a weekly chart, and we're getting a weekly sell on the algo signal there, Bob.
Yeah.
On ES. All right, let's go look at the 1 minute. Still coiling in here. They call this a bearish triangle.
Definitely a bearish triangle, guys.
And typically that, whatever the triangle is, you look at what happened before. And so then you would assume to continue that.
The fact that they're not beating this up into Powell's speech is not bullish.
No.
Okay.
Not bullish. Under 3,500 by Friday? No. Don't think so. Under 3,500 by end of January? Very possible. Sup BTS, thanks for popping in. Thank you for watching the videos. Appreciate that. At what point does a strong dollar affect us negatively? Well, it's going to start here. If this dollar takes off from the support area, everything's going to push back down and roll over. But if you're battling, the point we were making earlier is that if the Fed, like we have $9 trillion of debt, and the Fed's going to be pushing up into over 5%, repaying your debt becomes an issue. But if you have everyone forced into pegging to the dollar and basically hyper-dollarizing the world by creating a strong dollar. See, normally we would try to avoid that because that's usually bad for the global economy. But when you get pushed into a corner, it's like, what's the lesser of two evils? If you hyper-dollarize the world, your debt becomes much more manageable.
Yeah, and especially with real estate, I think what we're going to find here is I think I talked about this during one of our podcasts. States like California, 30% of their GDP is real estate related in one way, shape, or form. So California, everybody thinks it's all high tech, great. It's a hyper financialized environment. I know I live here. We live in la la land here in terms of what houses go for, as opposed to other parts of the country versus what people make. So um, it wouldn't take much to rip the underpinnings out of the California, especially in San Francisco Bay Area. They're really struggling now. It looks like Elon Musk is going to move Twitter out of San Fran. Not sure where he's going to stick it, but all of California's real estate is predicated on how well Silicon Valley and Bay Area does, because that's where everybody flows out of. Like where I live, I would say 80% of the people moving in here are we're dumping again here are
He's getting ready to talk.
yeah are from the Bay Area or from out of the country, and but there's very little organic like move ups here. So just so when that goes in, if the stock market can't go up, most of California taxes are generated from cap gains. So I don't think all that stuff has cycled through yet. In everybody's still living on the mother's milk of the pandemic stimuluses, and those things are winding down. So, and I know Bruce thinks that earnings are cheap. They're not cheap. Okay. Um, they're, if you look at stock market to GDP, a recession ends you at 80%. And I think we're still over 200% of stock value to GDP. So
There he is.
Okay.
There he is. All right. So now that he started to talk, let's take a look at what Price is going to do. And let's take a look at the headlines off of his announcements. We're going to get some cliff notes here on his talking points. So, and then he'll go into a Q&A. After erasing declines, Fed swap rates for 2023 edge higher. See, that's hawkish. The swap rates went lower after yesterday's thing, but now they're up higher. So those comments on the release of the interest rate decision were hawkish enough that it's affecting the swap futures. So again, they've been in this holding pattern, and basically the algos are going to probably step on whichever way this starts to break. The algos are going to step on that. Powell says we've covered a lot of ground, but the full impact of tightening is yet to be felt. That's hawkish. Powell says strongly committed to inflation target. Have more work to do. Hawkish, because that means more tightening. Bruce Hefner, thank you. Appreciate that. What's up, DGB? Thanks for being here. Josiah, yep. Jekyll Isle. So the algos are just kind of interpreting what he's saying and kind of reacting. I think the actual move is going to be down though here. Powell says we've covered a lot of ground. We still have work to do. We anticipate that ongoing hikes will be necessary to become sufficiently restrictive. The U.S. economy has slowed significantly since last year. So they're prepping you guys for a recession. Let's see what else. That's about it for now.
So we're breaking down a little bit.
Well, Jeffrey, if you were drinking on hawkish tones, you'd be totally drunk right now. Because I haven't seen anything remotely dovish. Here's the breakdown. Now we're gonna test that 200 or that 9 daily EMA.
1 second.
And if we start breaking below this, guys, there's not going to be a lot in the way. So you see where we're getting these big negative ticks. That's telling you that there's a lot of stocks dumping. More stocks are dumping than going up. And so we look for when we have big ticks, because that tells you there's a lot of meat behind this. And there we go. So we bounced off that daily 9. Now we're breaking through it. You could see a quick bounce back to back test it really briefly.
Hey, Phil, I'll be back in 1 second. A hummingbird came into the house, and I have to attend. I'll be right back, guys. Sorry. life
I can never take you on a live stream anywhere. What's up, Goldie? Thank you. All right, so now that Bob's gone, let's talk about him. So a lot of times when we break a technical level like that, sometimes they'll do a really quick wick up, so like back to 40.20, and if you're quick, you can short that, and then they wick it back down. But that's more like advanced trader stuff. But you can see how we bounced off that level, held. Remember that holding pattern we told you, the bearish triangle, and then it broke down. So that's just very textbook technical trading stuff right there. And like I said, I'm looking for 39.44 to get hit. We could see that today, depending on how much they start accelerating this down. Anywhere else in here, though, I don't have a lot. There was some congestion in here. We probably get a bounce off 39.85, I would imagine, somewhere in there. If we start slicing through these levels, you got to be careful. So this is our what you call the second drive. So you have the first drive down, consolidate, second drive down. I think this area down here with this double low, I think it's gonna be too juicy for them not to go probe. See how that low there and that low there, they didn't clean up. It's not a good auction down here. They'll clean that up, most likely. Under the daily 9 is also no good now. That's the Bears. The Bulls fumbled the football after making all this progress up here. You don't want to break through the daily 9. You want to keep the daily 9 should always be very supportive in a strong bullish environment. Hey, John Smith, how's it going? Bring on Bruce till Bob returns? I could. Virginia, thank you so much. You got any questions, Virginia? Appreciate that. So a negative ticks minus 800. That just means there's broad selling going on in the equities. Let's see. Let me check on the. All right, Virginia. Thank you so much. I really appreciate that donation. Let's see here. So far, the monthly rate of inflation has slowed in October and November. This is Powell's speaking notes. Powell says we need substantially more evidence of lower inflation. And that's something that we talked about yesterday even though inflation came in under expectations, the fact that it's still printing over 7% year over year is going to give the Fed ammo to keep hawkish. Fed's Powell says inflationary risks are skewed to the upside. So this is all completely hawkish. Okay, so the market's really going to struggle to get any kind of sustained bounce going here now.
Hey Phil, I'm back. I'm rolling my SPY puts down from 399 to 397 now. If anybody's followed me on that trade.
Fed's Powell, this is no reason to be complacent. Again, hawkish. Financial conditions fluctuate in the short term, but it's important to note that they reflect policy restraint over time. We're seeing effects on demand in interest rate sensitive sectors, but it will take time for the rest of the economy to catch up. So again, hawkish because they don't think the economy's cooled off enough for them. We anticipate that ongoing hikes will be necessary to become sufficiently restrictive. So, they're going to be hiking through 2023, which is what we said. 50 basis points is still a historically large increase. There's still some way to go. That kind of language, you start to, I think they start to look at like, well, maybe we're not going to get 25 basis points on the next meeting. Maybe we're going to get another 50, which was, that's going to be decidedly more hawkish. Powell says our projections are not a plan. There's no certainty about the economy. Here's that back test of the daily 9 I was telling you sometimes happens when you break a technical level like that. Now we'll see if that rejection holds now and we break down to new lows. But you see how they do? You see the games they play?
And the spreads are huge. I've still not gotten filled on my roll yet. The spreads are huge right now. Yeah, I'm still holding the 394 for today. So
far, very technical trading, not panic, but very controlled descent. And we've been seeing that in these sell-offs. This is all very orderly. Tells you they're just walking this market down.
Yep.
But this is so textbook so far. Bearish triangle, pennant, whatever you want to call it, breakdown, breakthrough, big reference point, 9 daily EMA, back test that really quickly, and then textbook would be farther down as we continue to start accepting down. See, we're accepting into a new range, a lower here, not new range, but a previous range. So, basically this area here is the range. And when you start accepting back into that range, you end up targeting the bottom of that range, typically.
Yeah, and now we're setting up for looks like another bear flag step down. And so the only way that blows up is if we now break that big candle at over 451 cents would break that downtrend for now. So, but this looks very mathematical to me.
So we're getting a decent bounce off the 4,000 level. That was the next level. So now we need to see if the daily 9 turns into resistance. Bulls will want to get it back over that and hold over that. They're trying to salvage this day and this move. Otherwise, going any lower than 4,000 turns up the heat on this 39.45 area significantly.
And just so you guys know, this sell-off, I know we're making some good money. If you followed me, you made $1,800 so far. But this sell-off, this is not a sell-off at all, guys. This is like breathing for the market. This is nothing yet.
Susie, daily 9 is the daily 9 EMA. So you can on a daily chart, if I look at a daily chart, this blue line is the 9 EMA moving average. But you can overlay that on different time frames. So you can go down to a 4-hour chart and it looks like a stepped line, but because you have multiple 4-hour bars in a day, but that line's representing the daily level. So as you can see, we came up, we back tested that level, pretty decent rejection so far, and a lot of times what we're going to see is you'll get 3 drives. So this was drive number 1. This is drive number 2, right? 1, 2, 3, something like that. What they will call the ABC move. Or this could be A. And then you're going to get, after the 1, 2, 3, a move up, and then that's B. And then move down becomes C.
I agree. Yeah, so Phil C, I was joking in one of the podcasts I did, and I said, it's going to look like this. Remember Smash Mouth? It's gonna be an L. It's going to be an L market. It's going to be an L economy, and I think it's going to go potentially for a couple years. There's going to be a lot of people with money and jobs. Okay, and there's going to be a lot of people with no money, no jobs, and I think this is going to be a bifurcated economy and a bifurcated market.
All right, let's get caught up on the talking points here. Powell says focus is not on short-term changes in financial conditions, but on long-term trends. The historical record strongly warns against premature loosening. The Fed is taking forceful measures to moderate demand. They're talking about demand destruction, trying to cool this economy. Our decisions will be based on the totality of incoming data. Our projections are not a plan. There's no certainty in the economy. I think I said that already. We've not reached a sufficiently restrictive policy stance. Keep saying that. I would also point you to our projections for the Fed funds rate peak level. Fed's policymaker projections are the most accurate predictor of where Fed policy rate will go. So right now they said 5.1% at the end of 2023. We have increased our peak rate estimates for each subsequent September this year. We're getting a counter trend buy on SPY. That's because of this move up. Powell says, I can't promise that we won't raise our peak rate estimate at a future meeting. That's even more hawkish. Powell says that if the data is bad, the peak could move up, but it could also move down if inflation data is weak. Powell says earlier this year it was critical to move rates quickly. Now it's less important on how quickly we move.
Okay, here comes the next. They failed to break that big red candle. So,
so basically, he's saying that I think the time of quick hikes are over, and now they're going to probably moderate a little bit as far as like the size of those hikes, but you're still hiking through the end of the year. So you could say, on one hand, you could say, well, that's kind of a pivot because we're pivoting from ultra aggressive to more moderate hiking. But really what we're looking for is the pause, which unfortunately, if they're not going to pause, then that means this gets drawn out a little longer. But, a lot of times what happens, the market gets super weak and then they just change course, even though they're talking about, well, this is the plan for 2023. A lot of times we've seen them say, well, the plan is this, and then the market forces them to change. Oil's up.
Which is not what they want to see.
I know. Let's see. We'll make a decision in February based on financial and economic conditions. So February is the next rate hike meeting. Fed's Powell's strong view on the FOMC is that we should keep rates at their current levels until we are confident that inflation will fall in a sustained manner. So, that's what we were saying. You're going to need to see quarter or month over month declines in inflation. But even if you start dropping 6%, 6.8, 6.5, that's not going to be fast enough for them to really do something meaningful.
Yeah.
Powell says expect housing inflation to fall sometime next year. Yeah, they want to kill the housing markets. That means probably higher mortgage rates coming. Vacancies.
Yeah, they've already killed the housing market. I'm trying to understand really what he's trying to say there. There's no sales.
I think they want to see now that they've killed the sales. Now they want to kill the prices. Vacancies remain quite high. Yeah. Vacancies in what? Services expected because inflation is unlike. What is he saying? Services expected because inflation is unlikely to fall quickly. We will need to raise interest rates further, and why we have a higher peak rate.
Yeah, people don't realize too. The higher the interest rate is, the higher the capital hurdles are.
Look at this. He says non-housing related services inflation will take a long time to fall. That's pretty. They're being very, very hawkish here.
I know they're trying to break. I don't know. The thing is, I think he's going to have stubborn inflation here, and the people that people that don't need to borrow money are going to be in really good condition here. People that have to borrow money are screwed. And so
Bruce and Mo, you guys need to go double down and get all into Bitcoin and thank me in 2 years.
Bruce, you might want to hold off maybe a year on that house.
Take a look at any commodity slash BTC. Just chart that. And I rest my case.
So just so you guys know, Phil hates Bitcoin. But in all seriousness, though, Bitcoin's ignoring all this drama right now. Um, it's just like being on a very special corner for retail or a beautiful ocean view. There's just not enough of them are going around, and they're going to hold value. Okay, we got a bit of a pop here.
They're just this very illiquid market here. Look at this. I mean, you're moving 10 plus points in a matter of seconds.
Yep.
Very illiquid market. Our range trader on the 1 minute is basically capping any price moves back up. But this is just extremely illiquid when you see the size of these moves. I mean, this is 1 minute candles now, and you're talking about 10-point ranges. That's not normal.
Yeah. Yeah, that 40-40 area.
Okay, so Powell says a 4.7% unemployment rate indicates a healthy labor market. I don't believe SEP qualify as forecasting a recession, but the economy will have a very slow growth. Let's see, let's see here. That does not sound like a labor market ripe for layoffs, which means that's another hawkish thing because they want the labor market to start cooling off. So that's what they're saying is we got more work to do.
So, Charlie, GBTC, I'm not too excited about yet. Somebody's going to arbitrage out that guy's fees.
Hey, Bob, rate futures now predict a 70% chance of a 75 basis point hike at the next meeting.
Wow.
We're going down.
Guys, here we go. Look, we're failing again, man. This trend band just keeps falling, guys. I just keep taking shots on futures here, Phil. Getting 4.6 points at a shot here.
Powell says, we think it is right not to move to a slower pace on rate hikes. I think we've got like about 20 hawkish lines and one dovish line.
Yeah.
I see channels for labor market balance in the absence of a jobless jump. Fed's Powell, we believe it's appropriate not to slow the pace of rate hikes. Having moved so quickly, we think it's appropriate thing to do is to move to a slower pace of rate hikes. They just got done saying they don't want to slow too much. Now he's saying they're thinking it's appropriate to move to a slower pace.
Yeah, these guys talk out of both sides of their ass.
Right? He just said we think it is right not to move to a slower pace on rate hikes, and then says after moving so quickly, we believe it's appropriate to slow the pace of rate hikes. What?
They're just algo fishing right now, Phil.
That's why the algos are That's why they're freaking out in here. Because we have a little bit of a lag on this.
You're not wrong. They're going to save the bond market. Can you imagine these tasty rates? Our algo just hit. Our algo just give us a buy on TLT.
So if you guys notice how the markets move these days, you get these small windows of actual where you're really moving a lot, right? And then you go sideways, right? And then you get a window where you move a lot and then you don't really make any progress, right? So it's like make good money real fast in that window there, 2 minutes, and then nothing happens, Yeah. And that's where you can scalp those big drops. So you look for these areas of consolidation, the high range, the low range. You try to get the high range and then try to hold for that quick cover and then wait for them to do that again.
Yeah.
Powell says we would have expected faster progress on inflation by now. So he's not happy with the inflation rate. And even though we missed and it was a big pump yesterday, it was just an exit pump. If you knew yesterday he was going to be talking like this today, you'd have to be insane to be buying into that long term.
Yeah. Bruce, I'm already in TLT. I think it's a good trade to be in. Ever since he announced, TLT's been on the rise, by the way.
No Christmas rally. Mr. Gentleman, it's possible to get a little push up into the holiday week. Seasonality is very strong into that, to where we go up. So in other words, we could dump down over the into next week and then potentially get a bounce that kind of holds going up into the first of the year. But I wouldn't be very bullish beyond that, and I don't think I'd be very bullish going into January, unfortunately.
I'll have to tell you guys, though, the price action today is not very bearish, though. Even though we're red, there's algos trying to lift this market as he's talking. And I don't know if they're trying to do that for exit liquidity, but they just keep trying to hold us in over 4,000.
Well, a lot of times too, though, Bob, the presser starts when they go up into the announcement and they start selling the presser. The selling typically will accelerate after the presser's done.
That's true. The problem is this guy could talk for another hour.
He does. He has been talking into the end of the market close. Is he still talking? Still talking. J. Powell. We need a good Johan reference. Guys, what are we doing?
Yes, Bob, should we be buying the BTU today?
What is the prediction?
Yeah, BTU hit our 4-hour bot yesterday, too. It's holding up pretty well. They kind of dumped it early, but it's right back to pretty close to where I bought it.
That's right, Kathleen. If you talk out both sides of your mouth, you got both sides covered. Let's see here.
I'm looking at the market now, Phil, see what's what.
Appalachian Squatch Watch.
You know what's getting crushed
Thank you for
right
watching.
now?
What?
Liberty Broadband Corporation got its head handed to them this morning, down 15%.
How come?
Don't know. They do earnings, big gap down. I didn't see any news. This stock, though, is a high price to sales stock.
What's the symbol? Let's take a look.
Yeah, it's LBRDK. LBRDK.
DK.
I shorted it a couple times. Didn't do really well shorting it. It just wasn't moving. And then it does these kind of dumps.
That thing's wrecked.
It's a crappy company too.
Let's see. Oh, well, here you go. You're going to go to 70, sub 72, because they're going to take out this low.
Yep. Tesla's down today 2.5%. Look at Tesla stepping down. You know, earlier today in our VIP room, we just talked. I think Elon Musk is losing interest in Tesla. And Phil, what's our target on? We talked about Tesla before in a podcast. Let me look. I have it.
Well, I can guarantee you we're going to 135. Like, guarantee. And the reason for that is because this is where we gapped. So we have a gap here.
And yeah, I have a measured move of negative $20.
So they're going to fill this gap here all the way down to 135-ish.
Yep.
Guaranteed. That's
I think that's
free money trade right there.
If you have time. You know, one thing that we use is a moving average VWAP. It's called moving volume weighted average price. Market likes to touch it. And so if you're going to take a trade and you're too far away from the moving VWAP, it's probably not going to pay you unless you're trying to take the trade back into the moving VWAP. So right now we're downtrending on Tesla. So if it gets back up to like, today it's like 181 area. This is a daily, but I usually look at it on an hourly basis here, taking a put trade. If it gets back to 164 area from where it is today, that's as of today, that'd be a good place to enter short.
If the market doesn't totally, wheels off and fall apart, the Fed's gonna see. This is COVID, right? COVID, like everything's Eiffel Towering the COVID pump, everything. So I mean, ultimately, you could see this thing back under $40.
Yeah, oh for sure.
Well, and that's the because this is taking into account the splits, right? So
yep.
The new value, but yeah, those are your that's what the Fed wants to get done, guys. Make no mistake.
You got Illumina that's already broke its Ranger. Could be a good short. I'm in UDAO, as you guys know. Anybody who's a subscriber, I'm holding out up to January. That's down to 61.18 again. Okay.
Look at
Go ahead, Phil.
look at how Tesla's broken the monthly Ranger.
Oh yeah.
And you had big support here on these monthly wicks. I mean, that was massive support. And we've broken that. So this area here is going to be big time resistance. This 185. Man, I wonder what the quarterly looks like.
You'll look.
They don't even, it doesn't go back, doesn't have enough data for Tesla to give us a quarterly. Yeah, but you break the monthly, because the market, the stock market, if you look at the stock market, it hasn't it did actually break the monthly, but I think Tesla's a leading indicator here. I think we're going to be back under that monthly envelope, or that monthly Ranger buy zone.
Yeah.
So we the cycles, when they give us these green bars, that tells us, bounce incoming. And the fact that that's all we got for a bounce, if this really does roll over here, that's pretty weak. So next area of interest would be 3230 actually on the monthly chart for the stock market to test this zone here. So this zone here most likely will give us some sort of reaction. And looking at the monthly chart now, especially if this starts to roll back over, this looks more and more likely there will be a next area for a low going into January.
Yeah, they're trying to push ES up now here.
So the SPX is under 4,000, Bob. So the SPX trades lower than the ES futures, and the fact that we're below here. Let's take a look here on the. Let's do 4 hours. So the fact that we're below 4,000 is not good, because normally the index likes to hold those round numbers, and so we start breaking below those, that turns into resistance, and we start looking for these lower lows to get targeted.
We just made another attempt to break that 1 minute Ranger, and another big wick.
Look at
so
that.
Anywhere in this 25 to 30 area, as soon as it gets there, a seller's coming in and taking them out.
Yeah, it looks like this trend line here is going to probably break that. Right now we're just chopping on the daily 9. See that? See how we're just chopping on that? But looks like another consolidation that ultimately will probably break down if I'm just looking at the chart first read there. That's why it's good to know where these reference points are.
Yeah. So what do you guys think? Do you guys like this live chat? Anybody that's not a subscriber, just listening in, we can help you explain our verbiage. So love to get your feedback. Also tell us what to talk about too. We're not always doomslayers here, but it's just what's been serving up in the markets of late. But we want to make this podcast friendly for you guys, so we can educate you at the same time. Make a little money along the way.
It's funny because we talk about, it seems like the stuff that gets the most hits is like crypto related. So pushing back up here, let's see. Fed Powell, I see little progress in lowering average hourly earnings. Let's see here. We still have a long way to go in terms of core services such as housing. Recent data gives us more confidence in our projections. The reopening of China is unlikely to have a material impact. He's totally discounting China reopening being bullish.
They're testing the moving VWAP fill at 56. Wow.
This is a very, 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 very illiquid market.
This is pretty amazing, actually.
Nothing that he said is dovish to the point where I would say like, But
they're holding the market. They are holding this market up.
Yeah, they're definitely trying to hold it into the end of his presser.
I'm putting a short on at 56, Phil.
I don't see us considering cutting rates until we're confident that inflation is declining in a sustained manner. So I'm looking for anything dovish that might have triggered the algos to go up, and I don't see it. I think this happened a couple announcements ago. Remember, Bob? And I'm going like, there's nothing dovish. Why is this? This thing's going up, and there's no reason. And after the pressure, it was like bombs away.
Yeah, just so you guys know, if they hold it up today, Wednesday to Thursday is really negative, by the way.
Powell, non-housing service inflation is fundamentally related to the labor market and wages. Powell says getting close to sufficiently restrictive rates level. He just got done saying that it's bizarre. It's bizarre how he's just going from one. He's literally contradicting himself every 5 minutes.
Yeah. It's like algo management 101.
He just said we got tons of work to do, hawkish all through, and we're getting sufficiently restricted. I don't know if he thinks, because the way that it comes off, it's just like, oh, we're almost done. And you just got done saying that we're going to be hiking all through. The 75 basis points is now a 70% probability.
Remember he did that before, and then 3 weeks later he had to go out and do that special press conference or special speech where he spoke for like 1 minute and said, sell everything.
Yeah. Our policy is getting close to being restrictive enough. Well, that's not what you said 5 minutes ago. In my opinion, and that of my colleagues, we will have to maintain policy at a restrictive level for an extended period of time. So now what he's saying is that the rate hikes are probably approaching. Well, he says they're going to be at 5.1 at the end of 2023, and we're at 4.5. So we have at least 4 more quarter point hikes, or some iteration of that.
Yeah.
We have a long way to go before returning to price stability. See, the moment he says anything remotely dovish, the algos just go crazy.
Yeah, this 40-50 area seems to be an area that they're trying to. I wonder if that's max pain of some sort.
Well, we've been dancing on 40-50. It's definitely a pivot. It's like it gets traction above that. It holds a trend. We fall through it. It turns into resistance. That's what I was saying. 40-50 is key for them to get back over if they're going to try and salvage this move. So that's kind of like the big support level.
Let me take a look here. See if the bot's firing anything off today.
Fed's Powell. Nobody knows whether or not we will be experiencing a recession. All right, well, that's Fed code for we just entered one, guys.
So Papa's Dream is just killing it today. Philly's made over $5,000, 6,000 trading SPY today.
That's fantastic. Debt market isn't thinking this is hawkish. Give it time, Bruce. That dollar is in a launch pad position. I think you gotta look. You're looking at the 5 minute moves, and that's not really what you need to be looking at on those. Was the last 2 days a bear trap for the longs? Typically, you call that a bull trap. Trapping the bulls. Yeah, I mean, whenever you run up into the announcements like that, typically it's a sell the news event, like high percentage of the time. So far the reaction isn't very surprising. Yeah, so so a little dovish there on the comments, and you see the algos just go up 50 points, just like that. So it's and that's because there's a lot of liquidity and leverage still in the system. So, and who knows? Maybe they're doing that on purpose just to see what the temperament of the market is. I think they want to get to a point where he can say, Yeah, I think we're done cutting rates, and the market just is lifeless. And then we're like, all right, mission accomplished.
Yeah.
So I think sometimes they say things just to see what the temperament of the market is, like trial balloons. And then they go, yep, well, this market's way too energized. We got to just pummel it. So so Powell's back to hawking. Failure to raise rates sufficiently would cause the most pain. If lower inflation reports continue, the likelihood of an increase in unemployment will be significantly reduced. There is no easy way to regain price stability. Well, that's your guys' fault. We're not thinking about changing our inflation goal. Really? So you're just trying to get to 2%, huh? I'm going to call BS on that, Bob. I think they're going to they're going to tell you at some point, you get used to 3% inflation. Won't call BS on that.
I personally think he's going to look for a crossover. I think he wants the Fed funds rate and the CPI print to cross over to declare victory.
Fury TV, thanks for listening. He's a TSA supervisor. Oh man, appreciate what you have to do there. Dealing with the public is not easy at times. It's hard enough to deal with people, and then it's like then you're dealing with them in a stressful situation. Everybody's anxiety's up because everybody thinks they're going to get frisked and sent to federal prison because they got a lighter, something in their pocket.
Don't worry about it. I traveled the entire world with a pocket knife in a backpack that I borrowed from my cousin, and I mean I literally traveled the entire world. And on my very last connection home, somebody found it.
That's pretty wild.
This is not. I said this is not good. I said, this is like my ninth TSA move, and not just TSA. I'm talking about in Europe and everywhere else. So this is like my ninth flight with this backpack, and you guys just found it.
All right, we're getting a real big squeeze here, and I don't see anything. That changes. There's nothing really dovish other than what he said that he thinks they're getting into sufficiently restrictive territory, which was a complete 180 from what he said 15 minutes ago. But then he came back in and said that they can't. Failure to raise rates sufficiently would cause the most pain. There's nothing other than that. I don't see anything that he's been way more hawkish than dovish. Now, what we've done here's the other reference point we have is the hourly 9 EMA, which is more for intraday trading. And we just back tested that. That typically when you get a large move away from the hourly 9 as we've had, and that first move back to it, which is 40.60 here, that's typically we'll see an initial rejection off of that.
Yeah, we just took the 5-minute moving VWAP too, Phil. 1ES.
It looks like they're going to undo the entire knee-jerk reaction down at this rate if this hourly 9 doesn't reject.
Yeah. Really fascinating to me.
I don't know what he said that the market decided to go risk on, though, if you look at what he said. I mean, literally the Fed funds futures or the rate futures went up to 75 basis points for February. That isn't bullish, guys.
Look at that move.
Yeah.
So, but when they have low liquidity like this, they can just do whatever the heck they want.
This happened last time. I remember this happened last time, and I was saying the same thing. Nothing he said was dovish. It's predominantly hawkish, and then after the presser it died, and He's still yapping. So let's see, let's look at what our different time frame rangers are telling us. So we flipped the 5. Now we do have a 5 sell arrow that's still valid. We got minute left on that bar.
Just a lot of volatility, guys.
Super illiquid. I don't know why they think he's dovish. I really don't.
Well,
Other,
remember,
other than other than he
trying to
said
get
we're
out.
getting close to a sufficiently restrictive rate level, but if he said that just to see what the reaction was, and this is the reaction, then they're just going to be like, yeah, cool, we'll just keep raising 75 basis points. That's what they'll do. I wonder if he's got an earpiece in and they're going like, all right, the restrictive policy, you just moon the markets, and then he goes, all right, I got to go to my where's my my hawkish notes.
Yeah, I don't look. I don't doubt it. I mean, I think they test algo responses all the time.
Charlie, yeah, it does set up for a gap down actually.
Yeah. Remember, they don't want to embarrass him either. So,
Well, look, I mean, they don't want the markets. The markets keep doing this. It's inflation is going to be an issue. I mean, the markets go up with high inflation. They really don't want the market at fourth. I mean, we're still in the 4,000s, right? So I mean, we're still way up, and they really haven't knocked this back down a whole bunch since. And they've look. If you guys look at the liquidity, I'm gonna bring that liquidity chart up. I mean, look where we came from, right? We've shown you guys this in the videos. Look at that. I mean, that was COVID panic pump. They're trying to unwind all this, and they didn't stop. They didn't stop until we got into November of 2021. So they brought it down, but we're nowhere near where we started. Nowhere near. So
yeah.
and this isn't doing anything. Like the liquidity level hasn't budged really. If you look at from where we were in the middle of this year, liquidity levels that's available to the market are about the same level, and we're trading at about the same level. So we are due for a next leg down if they're really serious about taking this market down. Part of that has to do with the balance sheet, and we are due for another balance sheet drop, but we'll see how aggressive they get in that balance sheet drop going forward. But you can see this is why he says there's a lot of work to do because they got to get all this liquidity or a chunk of it back out of the system.
Phil, we also just broke through the moving VWAP of 5 minutes, and we just broke right back underneath it again. If we get a second print underneath that moving VWAP, that should be a reversal area.
Let's see. Let me go to the intraday chart. Let's see here. Load layout. And let's see. I don't even know where mine is. I think it's this one. There we go. Yeah, pretty stern rejection off. So this is a intraday trading chart, and Bob's talking about this blue line is the moving VWAP. A lot of times algos will seek to get a mean reversion back to that. If you get very far away from your moving VWAP, you are a lot of times, it's like stretching a rubber band. A lot of times you'll get the snap reaction back to it. So that's where we went to the tick just about. Well, actually we shot it over a little bit and rejected off of it on ES. On SPY, which is the other instrument we look at, we watched the 15-minute on the ES because it's a 24-hour chart, so we let it calculate more bars. Intraday, we need more of a quicker reaction because we only have so many bars during the day that print on SPY, 9 a.m. to 4 or 9:30 to 4 p.m. Eastern, and so this one's a 5-minute moving VWAP. They're both 21 bars. They're measuring 21 bars. There's just different time frames. And we came right up, same thing there, rejection off of that. And quickly, too. Look at that, Bob.
Yeah. What I like to look at when I do these trades is that it came up to the moving VWAP and it broke through. A lot of people would take that long, but you usually have to wait. I like to have a confirmation candle that stays over and trade the third candle out. So now I'm watching on the short side. Now we had a breakout fake out. Now this is candle number 1, And if the second candle holds underneath, then we'll probably go down and test the 4,000 level fill for the close. If not, we're going to test the overnight high. That's my working assumption when I trade these into the end of the day. VWAP's kind of like climbing the top of a hill, and depending where you are, it's going to come back to the bottom of the hill because the market likes these symmetries. They like to test the overnight highs and lows. They like to test the daily high and the intraday daily high and low, and they use VWAP kind of as to okay, we're all in that home base.
That's what it was, Bob. He stopped talking. Presser's done. Presser's done.
He's done talking. Okay.
That's exactly. This has been pretty textbook where we get a drop, they run it up until he's done talking, and then once he's done talking, it comes off. I don't know why, but that's just what they've been doing lately with the algos.
Yeah, and he did it early this year, this time. So
yeah,
he is early. This market collapsed.
He is early. Yep.
Now we'll see.
All right, so presser's done. Typically, with this setup that we've gotten in the last 24 hours, it's week after the presser's done.
Yeah.
And so far, that's what we're seeing.
Yep. Now we'll just have to see what the institutions want to do into the close.
Yep. So daily envelope low, that's where we would look to see a reaction. Typically, well, you'll notice if we get these areas of consolidations and then you break, a lot of times they'll come back to the break of that, whether the break is up or the break is down, and they'll test it. So in this situation, the consolidation break up was here, and that coincides with the daily envelope low and the range trader buy zone. So pushing down, if you were day trading short, and that would be like a downside target, or waiting for a pullback to get long because your trend is now up. The range traders, this color blue is telling you you're looking to buy the dips. Yeah, so you look for what, the second 5-minute print, Bob, under the VWAP?
I do. So now I'm waiting to see, like, this bar has a couple more minutes to go, but
right.
If this bar prints, then my expectation is the that low. It's the Ranger low too. So they like to test these ranges during the day. So my expectation is that they would try to test this low.
So this is how undrugs the market is. So we have a series of positive ticks that ran us all the way up. Now we're back to negative ticks. So normally during the day, it's either or. You either have a day with positive ticks or a day with negative ticks. And this market is just bipolar right now.
Yeah. Now I'm just watching.
Nicholas, on the moving VWAP, it's just on the SPY. We use a 5-minute 21 period, and then on ES we use a 15-minute 21 period. Primarily. All right, let's see here. That was the day trading chart. Mr. Bitcoin not doing too bad. Ethereum's weaker. Not too bad though. But that 4-hour bar, I have candles are colored in a way that's just saying, well, it's trending up or it's trending down, so it's not necessarily reflecting actual candle color. This is an overlaid study, but this 4-hour bar on Bitcoin's not good. That's a 4-hour bearish engulfing, so we're probably going to see lower on that. Ultimately, probably getting down to the trend bands here, and probably lower. So a lot of right now, with the liquidity being as low as it is, a lot of the times these moves are sharp. A bunch of BART moves, right? Sharp move up, sideways, sharp move down, et cetera, on Bitcoin. Expecting especially if the S&P 500 starts to roll over going into tomorrow, this could drop pretty quickly. So, but we'll see what happens. Right now, that 50 area, which we've just been dancing all over for the last 24 hours, testing it from the top side here.
So far, no algo wants to push this thing higher into the close. So
Yeah, so we got a wick off the, basically over through the daily 9, just major bounce back off of it. The hourly 9 ultimately did reject here off that, which is pretty standard fare, especially when you come back from it that far away. So that's pretty standard. Question will be, coming if we come back and back test this breakout point here, does that hold? And that's going to be right back toward the daily 9 again. So we'll see. But probabilities tell us, given the setup, after the pressure's done, which it is done, it's usually weak. We stop going up.
Phil, the heat gave us a counter trend buy too with one bar. That last dump was the last bar down.
Mm-hmm. Yeah, we had the counter trend buy. That was a monster signal. That came off of here. If you guys notice our intraday, whenever we get the cycles lining up like this is 2 cycles on top of each other. That typically, even if it's a trend down, when that bottom one fires off like that, that's our counter trend, and that's telling you, hey, we probably got a bounce going the other way, which we did. That signal was good for 398 on up to 403.
If Phil, look at it now, we got a sell signal.
Yeah.
And
yep.
On the third candle after not achieving VWAP and just pushed down.
Yep. So this is going to fire in our Discord alert channel, this sell signal.
Yeah, I front ran it because it's my third candle under the moving VWAP. Okay. And I just paid me on some feuds. So I hope you guys are keeping notes or recording this so you guys can. This is good stuff we're giving you guys.
So, Bob, the U.S. Securities and Exchange Commission votes to propose amendments to the National Market Systems Regulation to require retail investors' equity orders to be exposed to open auctions. So they're getting rid of the middleman favoritism. Yep. That's probably the biggest change in the last 20 years.
Yeah.
It's fairly significant.
Yeah, that means commissions may be coming back.
Yeah, I mean, you might be right. But you're also going to get it's going to prevent them from front running. It's going to actually affect the high frequency trading guys.
It's going to blow them up, which means the market should go down, find its level.
Yeah, I think the Fed might. It wouldn't surprise me if the Fed was like, "Yo, we got to get these HFT guys out of the way. They're jacking up this market."
Yep. There's only one king, and that's the Fed. So,
So, guys, going into the rest of the week, we got a pretty big OPEX quad witching or triple witching, right, Bob? I think it's triple. Yeah, is it quad? No, it's a quarter. Quad. Yeah. So we got quad on Friday, meaning that weekly, monthly, quarterly expirations. So there's usually a drive to whatever is the big pin. Right now the level's 4,000, but if we start losing 4,000 and we don't recover it quickly, so let's just say we go down to that level we talked about earlier, 39.50, and we don't get a knee-jerk reaction back to 4,000 into OPEX, that's big trouble, and you'll start to see the hedging flows. The dealers will have to start hedging short and pushing this market down further.
Yeah, guys. Subscribe, hit notification, give us likes, help us with these stupid algos at YouTube so we can get more exposure.
Xtronic, glad to see you here. Virginia, how do we tell if we're near the bottom for Bitcoin? If you look on some of the videos we've done, we talked about the yield curve inversion, and I really think because Bitcoin, there's 2 things with Bitcoin. One is it's tied to risk on. The other thing is we do have an approaching supply shock mechanism coming, meaning that once a lot of the circulating supply is off the exchanges, there's going to be very little Bitcoin left to trade with on the exchanges, which means the price of Bitcoin is probably going to be a lot higher than we are now. That's going to decouple it from things like equities, but right now that mechanism isn't in play. So that's really the only thing that's going to decouple Bitcoin ultimately from things like the S&P 500, and we get this just huge rally on it when we get to that point. Until then, though, we're tied to risk on. So you have to look at traditional things like the yield curve inversion, which currently, let me see if I have a chart. We talked about this on, I forget which video it was, but the yield curve basically tells us that we probably have at least another 6 months before we can really think about this thing bottoming out.
Yeah.
I think it's this chart here. Yeah.
SPY, guys.
What's that?
Look at SPY.
Yeah, I know it's dumping.
So just guys, put this in your notes, okay?
So if you look at the yield curve, right? If you look historically at the yield curve, when we're in this red zone, right? Look at what the markets do typically, and so that's where we're at here.
Hey, our SARK trade just went green, guys. So bought that yesterday, 61.50, 61.53. So that's a good news. It might have been green earlier today, but
yeah, we're just getting pummeled with negative ticks now. It's been a bipolar market, guys. So the only exception to the yield curve was here, where we really did not get, we had a little bit of a dippy do, but we really didn't get like the big, like bear market. But if you remember, during this time, the Fed actually started stepping in the overnight repo market. So we were wondering, like, what the heck's going on? Like, I think whatever was happening here, they came in and they were, basically, I don't know if they knew COVID was coming. It sure seemed like it based on their actions. But basically, they stepped in, and eventually we did get a big drop, though. So yield curve inversions usually are indicative of some systemic problem. As you can see, we're deeply, deeply inverted here. We're taking out even the 2000, which was a very long bear market. So that's why, you look at like what we projected here in these red projection candles, that takes us out into well into 2023 before we think about maybe the market bottoming. Something like this could be very, very reasonable, where you kind of have like what we call like a 3-tap bottom, and then you finally start to grind out. So,
And Bruce, this is why I don't agree that a new bull market's coming, or this is bullish.
You can't.
It's just that
you can't
upside down like that. It costs you too much money. Your line of credits are all messed up.
Yep.
It's risk off everywhere.
Everything has a big capitulation puke move, right? COVID obviously was a one and done, but that was a special event because it was like they were trying to save the world at that time from what they thought was just implosion. But all these bear markets always have this big, final, like real prolonged, severe push down. We really haven't seen that yet, and that's what we think is going to be next. In the 2000 market, that was here basically. We basically spent from April 2002 down to July, those 3 months. You usually have like a 3-month span where it's just not pretty. And that could be very much what we're up against here going into the next year, January, February, March.
Yep. So my view, Phil, is that's the Alzheimer market with the long goodbye.
Right.
It's that's when people just start getting frustrated and saying, I just got to get out.
Right.
And that has not yet happened yet. Right now, the dips are still getting rewarded. And look what lengths they have to do to keep the game going. They allowed retail into the option market, and then they switched these 0 DTE trades. Anything to keep the casino in operation. But once those play out and those people get blown up, then there's no more suckers at the poker table. And by the way, Phil, we rolled all the way back down to 398 on SPY.
Yeah, it's a little bit of a balance here, but they're desperately trying to keep this. They keep trying to buy it up over the daily 9, and they just aren't unable to. And like I was telling you guys, they like to go back to these areas where it breaks from these consolidations, and that's exactly what we did here. Now the bears are really to fight off this squeeze back up and smack it right back down. Bears are really in control here. So Basically, if you're bearish, you want to see this daily 9 stay as resistance now, and then we go and attack these lows here at 39.97.75.
Yep.
Lots of negative ticks still coming in, so there's a negative 1,000. So I think we're gonna get that.
Yeah, we're gonna test the low. See, this is what I was talking about, guys and ladies. That VWAP's kind of like ollie oxen free, and then they make a decision which way in the hill we're going to slide down into the close, and we'll go right back onto the lows.
Nice job, Blake. Yeah, I've just been holding short myself. I just size down some because of the volatility, and I just look at my technicals, and I just trust that things like the liquidity and stuff like that are going to ultimately prove out.
I'm shorter than Tom Cruise right now.
Yeah, COVID was completely mismanaged.
Is that the Blake on?
I don't know. Is that mortgage broker Blake?
Former mortgage broker Blake.
MBB. That's what MBB really stands for. If you guys aren't aware too, MBB. Let me see which chart do I have up here. Let's take a look at this template. See, I told you guys I'd break that. I told you they'd break the trend line. Just have to wait. It's just very volatile. That's all. But if you look at MBB, which is the MBS ETF. So Blake,
Thanks, Trevor.
Blake actually educated me on this. Is that MBB is more of a driver on mortgage interest rates than the 10-year anymore. Is that still true, Blake? I think it is.
Yeah.
So it's inversely correlated. If it goes down, rates go up. That's why they've been hitting you up, Bob, because they've had a bounce in the last few weeks.
Yep.
Refi now, because it's hitting. They're going refi now, Bob, because it's hitting your Ranger zone on the weekly.
Oh my gosh, they've been bugging me every single day.
All right, thank you, Blake. So that's why, but now it's going to roll over, and mortgage interest rates are going to go back up. That's my prediction.
Yeah, just so you guys know too, and Blake, you can chime in. Blake has a lot of experience in the mortgage business, but when people are stuck in their house, you lose the convexity. What that means is that a 30-year mortgage is not a 30-year mortgage because you're not paying 30-year rates. They're assuming you're going to be in the house for a period of time, and the more there's sales going on and turnover, they can offer interest rates lower and lower and lower and not get burned. But if they're going to get stuck holding paper for longer term, they're going to get paid for that. And so you're going to start seeing interest rates on these 30-year and 15 years creep higher, just because they know people can't either refinance or they can't move. So that's why this is going to be lower for longer, and it's going to become problematic.
Bob, look at the weekly here on SPY. We got a weekly algo sell.
Okay, let me look. I'm in ES right now. Give me 1 sec.
We got an inverted weekly hammer on SPY. We got a sell alert. The algo's firing a weekly signal, which last time it did that, shortly thereafter we had the next leg down in the bear market.
Yeah.
So that's not bullish. That's not what you want to see.
Nope. And we're breaking. We're going to break underneath that a weekly moving VWAP, which is pretty scary too.
All right, let's look at the 1 minute here. What do we got? Breaking back down under the Ranger buy zone. If this can't turn up here, this is not bullish, especially when things are short-term cycling down like this. Failure to get back going higher here is not bullish.
Yeah, I think the 50 algo is going to take us down.
Yeah, so what Bob's talking about is at 3:50. It's at the end of the day, so Eastern Standard Time, 3:50. The markets close at 4 p.m., the cash markets. So at 3:50, a program fires off. It's either a buy generally a buy or a sell. So we look at like the 1 minute, and we'll end this at 4 p.m. when the market closes. But the 3 p.m. or the 3:50 p.m. Eastern candle, we'll watch and see if it's up or down. On a day like today, my bet would be that they fire down, they sell. There's one at 350, and there's one at 355. So it's called the 50 algo and the 55 algo. End of day games.
So I didn't know Patrick Swayze was shorter than Tom Cruise.
Yeah, I bet Blake. They're looking at the next cycle.
Blake, they're begging me to refinance my home. I'm like, dude, look at my mortgage rate. Turn your algo off.
So 1 minute, once again, we're consolidating.
Sorry, guys, I got the gardeners are next door firing up their. If I get too noisy, let me know, and I'll mute my mic.
I actually haven't heard anything. Let's see if there's any other headlines here. Size of February rate hike will depend on incoming data. That was a little tail end of his comments.
So I'm gonna look at the 4 hour here for the close, see if our bots found anything of interest. Just TLT, guys, and that was yesterday. This is pretty amazing. Our bot did not fire into this craziness, Phil.
FOMC hasn't discussed sort of recession it will accept. Huh? What does that mean? I didn't know they had a criteria for recessions that they can accept or not accept.
Oh.
I think we've entered one. If not, I mean, we already had 2 quarters of declining GDP. That's historically been what now they're trying to change the story on that, but 70% chance of a 75 basis point hike in the next meeting. That's pretty significant, guys. That wasn't even on the table prior to today.
No.
Powell said, strong view on FOMC is we need to hold rates at peak until we are really confident inflation is down in a sustained way. So looks like we'll go to another 100 basis points of hikes through 2023 is what the plan is. And they're going to hold that. That's going to be the pause until inflation comes down. And that could take all of next year and beyond. Unless the market, and I will say this, if the market really starts to tank, and they're looking at systemic problems, and that's going to include the bond market falling, the bond market starts to lose it, you're going to see them pause immediately. This whole game plan going into 2023 will be thrown right out the window. And that'll be where another round basically of they won't probably try to call it QE, but it'll be QE. And that's where you want to be long those hard assets. And I think gold, silver, Bitcoin, all that stuff's going to do tremendously well if that plays out like I just described.
If he pivots, you buy TLT.
TLT too.
You buy property insurance companies, and you just sit back.
That's a good sector too. Yep. U.S. rate futures price in 59% chance of a 25 basis point hike at the next meeting. That's going to fluctuate. It'll be interesting to see where that settles out as we go into the next week or two. All right, so our 50 algo, not quite there yet. Our 1 minute here is telling us the 1 minute cycle is kind of topping out here, so we may see this drop. Usually on the 1 minute, we're just looking for like scalp type trades, but that would imply that we would see over the next couple bars here a rotation back down to an extent. We do have a break here that they might try to backtest though, up at 399.70 on SPY.
And they're sitting right at this minus 2.3 deviation to on Lin Reg 5 minute. Yes, 5 minute.
Binance has canceled unavailable one of my token withdrawals today and canceled its USD trading pair to only USDT. So I think they may be trying to get away from U.S. dollars for regulatory reasons, and I heard there might be some announcement from one of the regulatory agencies, whether it's CFTC or SEC or one of them, that there might be an investigation, another investigation. I know they've been investigated before, but there might be another investigation into them. So if they're ditching the dollar pairs altogether, that could be part of the reason. It's trying to distance themselves from the regulators.
Yeah, they're pushing up a little bit here. We'll see how the algo goes.
Thanks, Emmanuel. Thanks for being here. How many we got in here today?
I don't know.
156 watching, Bob.
Yeah, I don't know. Can we ever know the total?
156 watching right now. I don't know what the peak was. It'll tell us later what the peak was.
Oh, was it? Okay. Yeah, I hope you guys like this. We'll do this again, but we thought it'd be a good day. And this is what Phil and I, we talk about all the time when we're in the VIP room. A little bit more interaction because we have more people in there, but we're reading the headlines. I'm reading the bots and
so here's another example where you go to back test a breakdown point, right? We've seen this a number of times today, and that's exactly what they went up to on SPY. They back test the breakdown point. This is on a 1 minute chart. And then, it takes a day like this with a high level of volatility for this stuff to be relevant. But that just goes to show you how much they like to go back. Because a lot of times what ends up happening, you guys can't see it, but if I was to open up a footprint chart, which I don't have handy at the moment, you probably would have seen a lot of bad structure in here. What I mean by that is, on the futures, right, every quarter point is a tick. And so sometimes those ticks on these big drops have missing volume. And so, excuse me, what they do is they'll go back in and fill in those areas of missing volume. And that's why you'll see sometimes these moves. They try to rebalance the books and they drive the algos back up there. So it's very short-term technical stuff. So if you're, when you're doing these day trade type moves, that's sometimes what happens in the mechanics of this stuff, especially when it gets really volatile. The VIX, we can take a look. Remember, we said VIX up, market up, not very bullish when it comes to the next few days. Let me look at a hourly chart on VIX. So, VIX was drifting up, what is this, Tuesday, came back in, drifted up yesterday, and then a lot of protection obviously came off after the announcement. So now what we're going to see is if this starts to drift higher from here, this will be, the VIX going up from here will be more meaningful. Because a lot of the big market moving events are done now. We had CPI, we had the Fed announcement, and that's why this came off. But if it starts to go up now again here, that's going to be bearish. We're going to see if this 21 level, we're going to see if that's going to become support here on it. See the bipolar market, now we got big ticks coming back in again. Very bipolar today.
Yeah. Hey, and Phil, I'm going to drop off at 5 till because I have to do an interview.
All right. So we'll wrap this up at 4 p.m. Eastern, guys, just to see where the market closes out. We'll take a look at the daily candle. And this looks like a bear flag to me right here, guys. So like how this trend line broke down, probably look at something like this breaking down here, like so.
Yeah.
See how the 1 minute, these gray bars are telling us the 1 minute, shorter term 1 minute cycles are topping out. And so when we see that kind of stuff, we do, the odds are telling us that we're probably going to do something like a breakdown like that. Now, we are getting toward the end of the day, and things get a little sketchy as far as technicals, but during the day, normally when we see that, we would high probability that we would see a move breaking back down like that. But when we get into the last 10 minutes of the day, there's a lot of rebalancing that goes on. So sometimes that can get a little sketchy as far as reactions to that stuff. So the next thing we're looking for now is a 50 algo to fire off, which is going to happen in 1 minute here. And so I say down, Bob. What do you say?
Agreed.
What do you guys in the chat think? 50 up, 50 down? Let's hear it. Thanks, Dusty Fruits. Yeah, man. We'll do this again, Xtronic, for sure. Friday's OPEX should be interesting. Should be volatile.
Yep. Just remember, guys, don't have spy calls on Thursday and Friday. They drop at $1.
Yeah, Kathleen, I don't have any issue to do this again on the Fed day. We just off the cuff yesterday decided to do it. I think it's a good idea because trying to make sense of these moves is wacky.
Well,
I guess we were wrong. Huh?
Well, let's see. We have 1 minute. Yeah.
Unless they reverse this really fast, which on a day like today is certainly possible. The initial move was a buy.
See if they hold a wick.
Looks like they're holding it up. Ooh.
Yeah, big move.
Definitely going to be an up candle. Now, what we've been seeing lately is that the 55, which will come in here in 5 minutes, does the opposite.
Yeah.
So, I'll be honest. I'm surprised that it was up today. I thought they'd be taking risk off.
Agreed.
Yeah, triangles are saying basically look for it to go down, but like I was saying, you can't really, going into the last 10 minutes because you have things like the 50 algo firing off. You don't know what those are going to do, so we generally don't take anything going into the last 10 minutes usually, as far as day trades go, just because there's rebalancing and things going on. Even in the last 30 minutes, things get really, really choppy. So especially on a day like today when we're following the FOMC rate announcement and volatility is just cranked all the way up to 10. This is on a 1 minute chart. Things get very, very noisy. So just more of an explanation of how we normally, on normal circumstances during the day, normal volatility, this is implying that we see lower. I still think this is going to break, this trend line does break down though, but
yeah,
that might not happen until after the cash close because S&P futures continue on. Even though the cash close at 4 p.m., that's when you'll see a crescendo on the volume, and then it drops off. And then those sneaky guys will make start positioning for the overnight session.
Yeah, and they're also, people are getting short into tomorrow, and they're making those people pay. So.
All right, so then the 55 algo, that's 3 more minutes. I'm going to say that's down too. I'm going to be stubborn. I'm going to say it's going to be down. What do you guys think?
Yeah, I agree. They rarely are in sync.
Yeah, Blake, I agree. Futures lower after the close and into tonight and into tomorrow. That's my lean.
Yeah.
I think 4,000. We've kind of stepped all over the daily 9 EMA. So once we do that, over under, it kind of becomes what I call the doormat, and so it loses its effectiveness. So I still look at it as a point of reference as far as the bullish line in the sand, but I think more importantly now it's going to be the 4,000 level holding. All right, so people think down.
Yeah.
So let's see what we get. 2 more minutes, less than. Bruce, you just need to buy Bitcoin, okay? we'll end today with a 4-hour sniper sell on SPY. All right, before the 5-minute fires, let's take a look at that. I don't see it, Charlie. I don't see it on the 4-hour on SPY. Charlie has a special SPY chart.
I think so. I think it's the Monte de Veo.
Charlie, sometimes when we run into that, you got to make sure that it's ARCA up here. It says ARCA because they will give you a couple different versions of SPY. And sometimes the difference is just minute enough where it's a difference between triggering and not triggering. Unless you're telling me that it was triggering when we were down lower, and because of this popped back up on this bar that it canceled it out. I'm not sure maybe if that was what you saw. Or maybe what you're talking about is we are getting a 4-hour cycle sell, which happened here on this candle right there, and we puked it up last time. We got it here on this candle with a sniper, puked it up. So every time we've been getting these 4-hour cycles up here, it's been very, very bearish. 1, 2, 3. We're getting our fourth one up here to push down. So
55 algo down.
All right, let's go back to ES and take a look at the 55 algo.
A big move too. All right, Phil. Hey guys, I got to run. I got to do an interview. So I'm going to be interviewing with Mark Z today. If you guys don't know him, he's a good interview.
Okay.
And thanks for listening. It was fun for me. Thanks, Phil, for doing this.
Remember, plug our podcast.
Yeah, we need friends. I'll see you later.
Thanks, Bob.
Bye-bye, guys.
Okay, we are going to... Bob's going to go away for the time being. You'll be stuck with me, and we'll wrap this up in about 5 minutes. So, yeah, so that 5-minute algo fired down on the 55, which we expected. And so now we're going to see if we can break this trend line here. See what happens. A lot of like I said, normally a lot of when we see this much gray bars coming in on our cycles, typically we're looking for a push lower. Again, it's the end of the day, so it's hard to tell with rebalancing sometimes, but normally that tells us that we're probably going to drop lower. So it's the stuff we look at intraday, when we're doing looking for day trades and stuff like that. Thanks, Charlie. I don't know, William. I don't know. It's like this market's very volatile. It might puke it up into the close. You never know. They're definitely trying to hold this trend line. Okay, so now it's kind of do or die for the trend line here. Kind of docile, actually, to be going in the last few minutes here. If we look at, we'll watch this, and then we'll watch the end of the session here. We got 3 more minutes, and then I'll just do a real quick. We'll look at the daily and see what it looks like. Really, really trying to keep this thing over the daily 9 EMA. But I still think, I'm still biased. I think this 39.50 level is going to get tapped. I think there's just too much liquidity. You can't, whenever you got these equal lows like this here, guys, there's a ton of liquidity under here for stops. And the market makers know it, and they'll come get it. Could they hold off until after OPEX? They could, but I just think given the structure here, I think that ultimately we're going to get that. It could also come tonight. It's hard to tell, but that's what I think is going to happen. I think rejecting off the 50 weekly on ES, then rejecting from the underside the 200 daily moving average, that's not bullish at all. It's really not. Next thing will be to see us start to trend under the daily 9, which tomorrow This little tick up here is going to tell us that tomorrow's value for the daily 9 will be 40.2250. So we'll watch that value going into tonight. And if we start to trend under that, it's, you know, that's definitely the downside target at that point. Okay, that's our yield curve. We'll get an update on this later. This is actually going to drop. Our liquidity is going to drop down, which will probably won't change fair value too much, but it could possibly trigger our risk off signal, which actually was firing until we got the weekly update. So on Thursday, we get weekly updates from the other two components of the liquidity, and all that goes into the calculation. But all things being equal, we may get a risk off signal, which we'll update in the newsletter later today. If you want the daily newsletter, that's Sunday night through Friday night usually, excluding holidays, or if there's just nothing to update. And that's a daily game plan for the following trading day. And that's at tradegenius.co/newsletter. All right, we're starting to break under that trend line. Let's go back to that. There we go. So no surprise there. And 40.20 is our daily 9 EMA, and market's closed. So there you go. All right, so what does the daily look like? Let's take a look. Let's look at the 1 day. So 1 day, obviously super ugly daily candle, super ugly, rejecting off of a key reference point. So no surprise that we're seeing rejection and a daily red bar here. And I think ultimately we're going to go down here and clean that up. So, and then we'll see what happens from there. Next level under that's probably going to be the swing high here at 38.97. So, other than that, guys, that's going to wrap it up. Thanks for watching, and we'll see you guys back in the room. And if you don't mind, hit like and subscribe on the channel if you haven't already. And we'll see you guys on the next one. All right, take care. Thanks for watching.